I welcome you once again to AE Accounting Tutorials. Today we are continuing our series on accounting for high pitches. But in this video, we will be taking a full practice question where we will be required to account for a transactions relating to small and less valuable items in the book of the high vendor. But before we go through the question, I would like to take you through some basic concepts with regards to small and less valuable items. Is that okay? So small and less valuable items. All right. So when we talk of small and less valuable items, okay, they are of less value and they are sold on a very high quantity. Because they are sold on a very high quantity, it becomes very difficult for the high vendor to account for each item separately in order to determine the gross profit and the interest component on each item. Because of this, the high vendor combines the item as one item and account for it as one in order to determine the gross profit and then the interest component of the period. Is this clear? So with regards to small and less valuable items, there are two basic methods that are used by the high vendors in order to determine the gross profit of the period. Okay, so the first method I would like to talk about is the provision for unrealized method. So provision for unrealized profit method. And two, we have the stock on high method. So with regards with the provision for unrealized profit method, take note that the items are sold out on credit basis. That is cash sales and credit sales. Okay, that is where initial deposits are made at the beginning of the high purchase contract, and the remaining balance will be paid by the high purchasers on installment basis. Is this clear? This means that in determining the gross profit at the end of the first year of high purchase contract, the gross profit that will be ascertained might not be the true gross profit of the business, just because there are some amount that are still with the high purchasers or the debtors. Okay, so the true profit that will be ascertained might not be the true gross profit. Okay, so this method is saying that we have to calculate the provision for unrealized profit on the gross profit that will be ascertained in order to determine the true gross profit or the pure gross profit of the period. And this calculation will be based on the debtors amount that is not yet paid. So we have a formula that is being used to determine the provision for unrealized profit on a high purchase contract. So for provision for unrealized profit, the formula is debtors, that is high purchase debtors, over the high purchase sales multiplied by the gross profit. And when we apply this formula, we will get a provision for unrealized profit and take it out from the total gross profit to ascertain the true gross profit of the business. So this is how we go by the provision for unrealized profit method. And the second method I would like to talk about is the stock on high. Okay, with this method, they are saying that they are not going to wait to arrive at the gross profit before they determine the true gross profit. They are much aware that the sales that is being made comprises of cash sales and credit sales. Okay, so we know that total sales comprises of credit sales and we have cash sales. And this will give us the total sales. This method is saying that they will not wait to arrive at the total gross profit before determining the true profit. At the initial stage, they will split the total sales into credit sales and cash sales so that the amount that is on the credit sales will be used to calculate the stock on high. Okay, So the stock on high will help us to determine the amount of the stock that is still on high, that is still with our debtors. Is that okay? So there is a formula for determining the stock on high. So with stock on high method, with stock on high, the formula is HP debtors all over HP sales multiplying by cost of HP sales. That is, we divide, that is the high purchase debtors that is not paid at that point in time divided by the high purchase sales. Then we multiply it by the cost of high purchase sales. Here we are multiplying it by the cost of high purchase sales because stock is valued at cost. Okay, so we multiply it by the cost of the high purchase sales in order to determine the stock on high. In this sense, when we arrive at the gross profit, that gross profit will be the true gross profit of the period. Okay, so the first question we will be taking right now, the question we are about to take, you will be using the provision for unrealized profit in determining the gross profit of the business. Is that okay? So let's quickly go through the question together and see how we can solve it. Okay, Yabe Enterprise started business on 1st January 2019, mainly to sell flat screen TV sets of a standard type LG54 to teachers on high purchase terms. The total amount, including interest payable for each TV set, is 6,000 cedis. Customers are expected to pay an initial deposit of 1,200 cedis, followed by 24 monthly installments of 200 cedis each. Yabre Enterprise purchased his stock from Somovation Electronics at a unit cost of 4,000 cedis. Price remained unchanged throughout 2019. The following trial balance was extracted from the books of Yabre Enterprise as on 31st December 2019. Capital 4,000, but remember there are 3 zeros hanging at the top. So capital 4,000, fixed assets 400, drawings 160, bank overdraft 384 cedis, creditors 1,064 cedis, purchases 7,200, cash collected from customers 3,060, bank charges 16 cedis, wages and salaries 512 cedis, general operating expenses 220 cedis. For the first year of operation, year ended 31st December 2019, 1,700 units were sold. It is the policy of Yabre Enterprise to take credit for profits, that is, including interest, in proportion to the cash collected from customers. Fixed assets are depreciated at a rate of 10% on cost. Required: prepare a high purchase income statement for the year ended 31st December 2019 and a statement of financial position as at 31st December 2019 using a provision for unrealized profits method. All right. So to begin solving this question, there are some key things we have to take note of. Is that okay? So we are fortunate that there is information available for us to determine our debtors balance, total sales, and staffs. So there is no need for us to open the individual account in order to get these balances. So what we are required here is to prepare the high purchase the statement of financial position. Okay, so the name of the business is very necessary. That is Yabre Enterprise. Okay, so our first requirement is high purchase income statement for the year ended 31st December 2019. All right. So to begin with the income statement, the first thing we have to consider is our sales. Is that okay? But the sales amount is not given directly in the question. We have to work for it. Okay, so in order to determine our sales, we have to know the selling price of the TV sets and then number of units sold. Okay, so the unit price, so these are workings. So you have the selling price of 6,000 cedis. Then we have the units sold. From the question is 1,700 units. So to get the sales, we multiply the selling price by the units sold. That is 1,700. And this will give us 10,200,000. All right. So this is our sales amount. So let's hang 3 zeros here to make our workings very simple. So the sales amount is 10,200. And from this question, there are no adjustments on sales. So we move straight forward to the cost of sales. Okay. So we have cost of sales. So we are lessening the cost of sales. With the cost of sales, there is no opening inventory in this question. So the next item we can see is the purchases amount. Okay. So we have purchases of an amount of 7,200. So after recording the purchases amount, there are no adjustments to be made on purchases. So we have to go through the question and see if there is a closing stock. Okay. So in order to determine the closing inventory, what we need to know is that we need to know the units sold. Okay. In order to compare with the, we need to know the unit bought in order to compare it with the units sold. Okay. So to determine the units bought or units purchased, that is the purchase amount divided by the unit cost, and the unit cost is 4,000, meaning we have to hang 3 zeros, so 4, and that is giving us 1,800 units as the units purchased. Okay, so in order to determine the closing inventory, we take the unit purchased from the unit sold, that is 100 units. Okay, so the closing inventory or the closing stock will be the 100 units left multiplying by its cost price. Okay, that is the per unit cost, that is 4,000 from the question, and that is going to give us 400,000. Very good. So this is the closing unit. So we take the closing units, sorry, we take the closing stock from the purchases. So closing stock, and the amount is 400,000. 3 zeros is up, and this will give us 6,800, and this amount is the cost of sales. Okay, so now we take the cost of sales from the total sales, and that is going to give us an amount of 3,400 as our gross profits. But remember that we are using provision for unrealized profit, and the gross profit ascertained might not be the true gross profit. So we need to calculate the provision for unrealized profit on this gross profit in order to ascertain the true profit of the business. Is that okay? Remember that at the end of the period, or at the end of the 2019 financial year, all the money involved or all the monies in relation to the sales has not been paid. Okay, this means there are some part of the money that is still with our debtors. Okay, and because of that, this gross profits might not be the true gross profit of the business. So we need to calculate provision for unrealized profit on this in order to ascertain the true gross profit of the period. And the formula for provision for unrealized profit is the debtors balance over HP sales will be multiplied by the gross profit. Very good. Now we know the high purchase sales to be 10,200. We know the gross profit to be 3,400. Now we have to determine the debtors balance. Okay, so in order to determine the debtors balance is not given straight from the question. But remember, we've been given cash collected from customers. That means that is the cash that has been received. So in order to determine the debtors amount, so the debtors amount will be the total sales of 10,200. That is sales. Then we subtract the cash component, that is 3,060. So the remaining balance will be 7,140. So this will be the debtors amount. All right. So with this, we can now determine our provision for unrealized profit. So provision for unrealized profit is the debtors of 7,140 divided by the total sales of 10,200 multiplied by the gross profit of 3,400. And this gives us the true gross profit. The provision for unrealized profit is now 2,380 as the provision for unrealized profit. In order to determine the true profit, we take this provision for unrealized profit from the total gross profit we had initially. That will give us 1,020 as the pure gross profit. Okay, so after ascertaining our gross profit, we have to take out all the indirect expenses. All right, so with less expenses or operating expenses. So with the operating expenses, we have bank charges, we have wages and salaries, we have general operating expenses from the question. So we have bank charges of 16. Then we have wages and salaries. Wages and salaries of an amount of 512. Then we have general operating expenses of an amount of 220. Okay, but remember that there is a depreciation policy of Yabre Enterprise to depreciate its fixed asset at a rate of 10% on cost. Okay, so we are depreciating the fixed asset by 10%. Okay, so we have depreciation. Okay, and that is 10% on the cost of the fixed asset, that is 400, and this will give us 40. So we add the total expenses and that will give us 788. Okay, so we take the total expenses from the true gross profit to ascertain the net profit. The net profit of the business. Okay, so this is how we go by the high purchase income statement for Yabre Enterprise. Okay, so let's also consider the B part by looking at the statement of financial position as well. So to begin with the statement of financial position, from the question we begin with our fixed assets. Okay, so we have fixed asset, that is the non-current asset. All right, and the amount involved is 400 from the question, but remember there is 3 zeros up, 400, and we take our depreciation. Okay, that is the depreciation charge for the year, an amount of 40. So we depreciate the assets, so depreciation, the depreciation is 40, so we subtract our depreciation to get a carrying amount of 360. Okay, so after this we look at the current asset. With the current assets we have stock, and that is the closing stock. Okay, the closing inventory of an amount of 400. So we take it from here, the closing inventory of an amount of 400. Very good. Then we look at our debtors. Okay, and the debtors amount has been already calculated. Okay, that is 7,140, and we did that by subtracting the cash cash collected from customers from the total sales. The cash collected is 3,060, and that gives us 7,140 as the debtors balance. But remember that we are using the provision for unrealized profit method, and we need to take the provision for unrealized profit from the debtors balance. Okay, so we less our provision for unrealized profit, and we calculated that from the income statement, and we have 2,380. So we subtract the 2,380 and we arrive at 4,760 as the debtors balance. So when we add these two amounts, we arrive at an amount of 5,160, and this will be added to the current asset, to be added to the non-current asset, making 5,520. This is the total asset. But remember that we are using the total asset approach or model in preparing this statement of financial position. So we look at equity and liabilities. All right. So with that we have capital. And the capital from the question is an amount of 4,000. So the capital from the question is an amount of 4,000. Then we add our net profit. The net profit ascertained from the income statement is an amount of 232. So we add 232. Then we less our drawings. The drawings in the trial balance. Okay, the drawings is an amount of 160. We are lessing the drawings. Okay, and this will give us an amount of 4,072. Okay, after us we look at the liability component. Okay, we look at the liabilities. So with the liabilities from the question we have creditors and bank overdraft. Creditors, then we have bank overdraft, bank overdraft. Okay, creditors is 1064 and the bank overdraft is 384. Okay, and when we sum these two, it will give us 1448. So when we add the total liability to the equity component, this will give us 5520, and this will be the capital employed. Now the statement of financial position has balanced with an amount of 5,520, 5,520. But remember, this is a total asset model. Okay, someone may use maybe a net asset model or a different model to prepare the statement of financial position. The balancing figure will be the same, but it must also balance as well. So this is how we account for transactions with regards to small and less valuable item in the book of the high vendor. But this time we use the provision for unrealized profit method. But in our next video, we'll be taking the same question, but we'll be using a stock on high method to make the accounting arrangement. Okay, so if you haven't subscribed to my channel, I will encourage you to subscribe to my channel. You turn on the notification bell so that any moment I upload any new video, you'll get notified on your devices. So until we meet for the next video, it is bye for now.